Hi everybody, welcome to my Periscope today. Hi Trisha, thank you for joining me today. So today I am going to talk about expenses and how you can, how those expenses for equipment can benefit your business come tax time. So my name is Elena Tercero and I am a CPA in Santa Fe, New Mexico. I do own Little Light Accounting CPA firm in New Mexico. And so I'm going to talk about equipment. So when I think of equipment, good morning. When I think of equipment, there are so many different types of equipment that people can use in their business. So I'm going to go through a few of them, but as I'm going through some of them, shout out some other things that you may think of as equipment as it relates to your business. So I'm going to first start off with electronic devices, laptops, cell phones, iPads, even desktop computers, printers, those sorts of things when you're thinking about electronics. Lighting equipment, if people have like stellar ring lights or other types of lights that they may use for their business. Even phone holders or cameras, also another one. If you work in the fitness industry and you have clients, equipment that you could use, weights, other different types of equipment that you could use. Also, if you're making samples of different protein shakes for people, you can also include that, like a blender. So the caveat for those, for all the equipment, even for real estate, for realtors, if I know that my husband personally uses a drone when he's filming some of his higher end homes, he will actually use a drone and take that drone up into the air and do aerial footage of the home. So even with that, those drones can also be used. Lock boxes for realtors, another piece of equipment that they need in order for them to build their business. They can't live without them in most cases. In other states, sometimes they have the lockbox thing on their phone. So then the phone, again, goes back to a piece of equipment. So it always just depends on you and your industry and your business, what you consider equipment. So you've purchased this equipment, and then what do you do with it come tax time? You have two options that you can do. One, you can either expense immediately, or you can what is called depreciate them over the useful life. I'm seeing a few more people come in. Welcome. Thank you for joining us. For those of you that just joined, my name is Elena Tercero. I am a CPA in Santa Fe, New Mexico. I own Little Light Accounting CPA firm. And I am here really to help you as a business owner know what to do with all of the expenses, hi Kiki, that you have in your business, especially when it comes to the end of the year for tax time. That's when it becomes critical. You, as business owners, we go through day to day, and just purchasing things and not really thinking about the end result at the end of the year come tax time. So that's what I'm trying to do, and I'm talking specifically about equipment and what you can do with that equipment come tax time. So there's two things: expense immediately, like I talked about a little bit, and I'll go through that as well, or you can depreciate over the useful life of the equipment. So what the heck is that, right? So expense immediately. So I'm going to talk about that. I'll do the depreciation first, since it's smaller and maybe a little bit easier. And then I'll go into what I termed expense immediately. So depreciation, what that is if you purchase equipment, say you buy a laptop, $1,000, and it is a 5-year or a 4-year, has a 4-year useful life. So what you're going to do is you're going to expense that on your taxes over the 4 years. So you're going to take $250 every year for 4 years as an expense on your tax return. Now you already spent that money this year, right? So you've got two different, what we as accountants call sets of books. Laptops, see? Exactly. When your laptops die, you don't really want to go out and spend another one, right? Because you really like that one. You don't want to spend the money on that. But sometimes you don't have a choice. And so if you're going to what's called depreciate it, you're going to expense it on your tax return over the life of that piece of equipment. Most of the equipment that I talked about has a 5-year life. You know, some of the things that I talked about, the electronic devices, the lighting, not really the phone holders because that's a very small dollar amount. The drone, those sorts of things typically have a 5-year life. So you're going to depreciate that over the 5-year period. So that's one way to do it. So then expensing immediately. What does that mean? So you've bought the equipment. Say, Kiki, I'll use your laptop as an example. Say you go out today and you purchase that laptop. It's going to be more than $1,000, right? So and my 3-year-old is here with me. She was watching TV in the other room, so she's coming to tell me something. So a little distracted. Yes, my love. Let me finish this and then I'll help you, okay? So expensing immediately. So what does that mean? So Kiki, you're going to purchase that laptop. Yes, that's what that means. You're going to spend some money that you really didn't want to spend. But so if you actually go back, so I talked about business budget yesterday, so it's still on my Periscope, so you can check it out. It still has a couple more hours. Check that out so that way it can help you build your business budget. I can't see her. No, we can't see anybody. Only they can see us. And so that'll help you. Thank you, Sass. That'll help you with the budget to kind of determine how much money you're going to spend. But say you're going to spend $1,000 on your laptop, right? So that what you can do is you can either so we're talking about expensing it. So because it's under a certain threshold, the IRS calls them de minimis expenses. They don't really give a lot of specifics about what that term means, but they do say that, number one, if you as a business owner have written down how much, so say that you as a business owner, you expense and you bring in you decide that you're gonna spend most of what you purchase, like $5,000, say, or $6,000. So then what you're gonna do is you're gonna write that down and you're gonna say, okay, so what I've decided to do for my business is that if I purchase anything under $6,000, because that's typically what I spend, then that's what you can expense immediately. Do you want to go back and watch TV? So that's one way that you can do it. The caveat on that. Oh, okay. I'll be there in just a minute. The caveat on that is that you have to have written that down at the beginning of your tax year. So now that we're in August, if you didn't know that and you haven't done it, then you can't use it, but you can use it going forward. Another one that you can look at is if the equipment, now I need my notes, now that I'm not holding her. So if the equipment usually only lasts for 1 year, you can also expense that immediately. So a laptop, Kiki, unfortunately, they typically don't last only a year. Their useful life is usually about 5 years. So you can't use it that way, but there's still another way that you can expense that laptop immediately. So you can also look at it is if the equipment or anything that you purchase, the ticket price of that is $5,000 or less, then you can also, unless she buys a new one every year. Yes, then if you buy a new one every year, then yes, you can expense it every year. Typically that doesn't happen, but you know, as you're building your business, you could be purchasing multiple. So the other one is the $5,000, the $5,000 limit per item that you're purchasing. If it's $5,000 or less, you can also still expense it immediately. Now, if it's over that $5,000 and you haven't come up with, well, maybe we shouldn't break them as often, but you know, you never know. You don't know how long it's going to last. It's just a typical estimate. The IRS kind of estimates that. Can you take me, Patty? Yes, I will in just a sec. The other thing, there's one other thing that is called Section 179, another IRS term, but really what that means is as a business owner, you can deduct up to $25,000 of equipment in that tax year and deduct the whole thing. So going back to that laptop example, Kiki, if it's going to be over $5,000, then you can still expense it immediately using the accountant term or the IRS's term of a Section 179 deduction. So there are other ways that you can take what you spent on something and immediately turn around and use it on your taxes as a deduction. Sometimes that doesn't always happen, and so that's why you have the ability to depreciate it over a certain amount of time. That was really the information that I wanted to give you. My little one needs to go to the restroom, so I am going to leave you with this really quickly. If you would like, I have free tax tips on my website, bit.ly/LLA tax tips. Thank you for joining me, and I am going to rush to help her. I'm glad you enjoyed it. Thank you.